Good afternoon, dear viewer. Since you asked, I get right into it. Um, I start with the weekly chart to see where we are. Me, it's a little bit unclear, but we'll try to do to interpret this somehow. So first of all, I see and then a very, very long correction, which almost gets down to the starting level of the impulse. To classify this as an impulse, I mean, I wouldn't want to see this low broken in any way. But what I see as a pattern is when we get these lows connected, and then we also connect these two, it looks somewhat like a diagonal pattern. So where do we have this? Bear with me for a second. Ah, here it is. So 1, 2, 3, 1, 2, 3, 1, 2, 3, and that's wave 1, 2, 3. Now we are missing 4 and then 5. So what I would want to see here is really this kind of move. That would be my that would be something that I could understand. Then a drop down here, then a correction up, and then another wave down. So that would bring it nearly to 0. That's why it's called ZIL, I think. I don't know. I mean, you could try and trade this, yeah, but this move up, I would try and trade this. It could be one of those, yeah, like a straight line up. But I don't know, very risky to be honest. But let's get down to a lower time frame, and let's see what we have here. So I see here a zone of low liquidity here, which we have almost approached, or even approached maybe. So let's see how we can mark this out on the chart. I like to take the fib retracement and set it to ranges. That's my method that I use quite often actually. So I just put in a simple fib retracement tool and then get a line with every quarter of this marked out area. So let's see how this looks. I think that's better actually. Yeah, I like this one. Let's see. Yep, works. What I see here is we have the zone of low liquidity. Yeah, so it's a place where not many orders up or down would be placed. Here you see a zone of high liquidity, so everybody's buying here. That the price is clearly rejected. I mean, it has not been accepted at these lows here. But as it climbs up to this low liquidity level, it starts to be rejected. So where do we have our brush? It's here. 1 rejection, 2 rejections, 3 rejections, 4 rejections, and then it pushes up higher. Yeah, so we got back into this range here. And now what I would want to see, I mean, we got this far, so I would expect that we get at least to here, to half of this range. So if I put in the levels, that would be 0.5 of this range, half of this range, where I would expect a rejection. And let's see where this rejection could take us. So if we hide this, I would take this here again, and let's say this is I think that was half of the range roughly. I would expect a retrace to at least here before the next leg up. That would make it an impulse. So 1, 2, 3, 4, 5, retrace 3 waves down. Sorry, 3 waves down, and then possibly a rocket up. A rocket. That I would expect to see something like this, so that we can still, if we go back to the go back to here to this weekly chart, that we would still go back here and then maybe even test these levels at round about 20 cents, which would give us 6x roughly. That would be a nice move up. And then my expectation would be a total collapse. Again, let's see, 90+% I would expect. If this is a diagonal, right? But the way I see it is, it does what I want it to do. So it goes in threes. 1, 2, 3, then 1, 2, 3, 1, 2, 3, and then I expected it 1, 2, and 3. Yeah. So if it would ever get here, that is for sure a place to book your profits and get out of this asset. I hope that's helpful. That's it. Thanks so much.